Hello and welcome everyone. We're here today with Anthony Bauza, one of the expert real estate attorneys from Florida Closing and Escrow. And Florida Closing and Escrow is a title company with the main branch in Sunny Isles, but they're also mobile and wireless, digital, with multi-languages and expert attorneys to help you from contract to closing. 1-800-FL-CLOSE. And we're here with Bow Live to bring you updates. Today, the topic is about the FIRPTA updates. So, Anthony, if you can give the agents some updates, thank you.
Sure. So one of the questions that we most get asked is about FIRPTA. So I guess the first thing would be, what is FIRPTA? And FIRPTA stands for the Foreign Investor in Real Property Act. It's basically applies to nearly all transactions, residential and commercial, where the owner of a U.S. real property is foreign and is selling that property. Part of that process requires the buyer, or us as the closing agent on the buyer's behalf, to withhold and submit to the IRS a certain percentage of the sales price as the anticipated taxes that will be due from that foreign seller on the sale of that U.S. property. That amount is 15%. We have this flow chart that's here on the screen that will basically tell you whether FIRPTA applies to a specific transaction, because there are exemptions and reductions in that amount depending on the circumstances of that transaction. So one of the main exemptions is whether the buyer has definite plans to use the property as their residence for at least 50% of the time of the first two 12-month periods. So what that means is it's not whether the buyer is going to use it as their homestead or permanently move into that property. It's whether the buyer, and that includes any member of the buyer's family, will reside at least 50% of the time, so at least 6 months out of the year for each of the first 2 years. If the answer to that question is no, as you'll see on the left side of that flow chart, then 15% has to be withheld from the foreign seller. Now, if the answer to that question is yes, if the buyer says, okay, I do have plans to reside on the property, or me and someone in my family plans to reside on that property, then we look at the sales price of that transaction. If the sales price is $300,000 or less, as you see on that flow chart, then it's exempt. The foreign seller does not have to pay FIRPTA withholding tax. We don't have to retain that 15%, and we just need the buyer to essentially sign a residence FIRPTA affidavit stating their intentions to reside on the property. If the sale price is $300,000 to $1 million, then it does not eliminate the 15% entirely, but it does reduce it to 10%. Now, if the property is selling for over $1 million, then regardless of the buyer's intentions to use the property for 50% of the time, the withholding will be 15% regardless. So those are the two instances basically in which the 15% will always be held. If the buyer does not have plans to reside, or if it's more than 1 million. But if the buyer does have plans to reside and it's less than $1 million, there'll either be no withholding if it's less than 300,000, or reduced to 10% withholding from 300,000 to $1 million sale price. So this is something that the seller's accountant will definitely need to provide some forms if there are amounts due. Without going too in depth into it, the accountant will either provide a form to pay the funds at closing, or there is another option that the seller could basically make an application on or before closing to the IRS and basically submit all the documentation of the sale, submit their potential gains or losses, and make their case to the IRS to say, hey, I'm only going to make this amount, or I have no gain on the property, and my withholding should be reduced. In that scenario, the IRS will then respond, and they respond with what's known as a withholding certificate. Once they issue that, it'll advise us as the title company, the closing agent, if the amount is reduced, or if nothing's going to be withheld, and what to do with that money. Either pay it to the IRS or refund it back to the seller. But that would be in the case when the FIRPTA does apply to the transaction, and those will be forms that will need to be filled out by the seller's accountant, and they'll provide it to us in order to facilitate the transaction. But that's basically a brief overview. Basically, if you have a seller that's foreigner, FIRPTA is always going to be a topic that you'll need to know about, that you'll need to plan for. It is built into the Florida as-is contracts and the standard contracts. There is a section that says both sides agree to cooperate in the filing of any necessary forms and the withholding of anything. So it's something that, yeah, if there's a foreign seller, that needs to be addressed in a closing.
Okay. If there's any questions, you can post in the chat and we'll get back to you. And we appreciate you joining us today. And please be in touch if you need any assist with any legal questions pertaining to real estate and title and closing services. Thank you for joining us from Florida Closing and Escrow and BOW.